Good morning, folks, and welcome to the pre-market insight for February 6, 2020. Man, we have fireworks once again, all-time highs in the market. Let's go. So we're looking at a chart of the ES S&P 500, and I'm zoomed out to the much higher time frame. This is actually a 10-year monthly chart on the S&P, and I do this to give some wider context of the things that we've been talking about and a big picture from the forest view as to why we're experiencing the type of price action that we have been over the past couple months. Now, recall there are different market participants that operate on different time frames. This is a monthly chart. Going back to the end of 2017 through almost the middle of 19, we've experienced one big broadening formation. And again, as we spoke about in recent videos, a broadening formation is a series of higher highs met with lower lows. Also, essentially it is range expansion. Range expansion within the context of a fairly clearly defined range extremes. And so what we've had for quite some time is ranges reversing, going from high to low, low to high. But now we've actually broken out of that broadening formation in mid 2019, and essentially we've had 1, 2, 3, 4, 5, 6, 7, near 7 months of straight upside. Near 7 months of all but straight upside. However, the thing that has been difficult as an active trader to deal with is the fact that the ranges have continued to expand, which means there's actually more intra and interday volatility that creates opportunities on both sides of the trade, making it a bit difficult to hold on to winners that are experiencing weakness only to have it come back and be stronger as the market turns around. So what does this mean for where we're at this point? Well, this is a monthly breakout that has seen a nice, fairly hanging man candle, near a hanging man candle, which means that there was some serious selling pressure coming in. But it is followed up by a bullish bar, nearly a bullish engulfing bar, that has taken out the high of the prior bar. Typically, what that means is that we should have and should see some continuation to the upside. But because we've had some definitive selling come in on this bar, we need really to see, I would say, 1 or 2 more of these to negate this possible indecision, this possible distribution bar in the following months. So ranges are expanding, there is some distribution going on, but the sentiment continues to be overall bullish. Position yourself accordingly. So let's take a look at what we can expect for later today. So we're back down to the hourly chart now, again in the midst of some broadening formations to the left, and now we've come to negate this former all-time high here at 33.37 and add approximately 20 points to it at the new all-time high at 33.57 made in the pre-market session. So keeping it very simple, smarty. On the upside, we have a target of 33.57. Let's see if we can tag 33.60 if there is any continuation going into possibly 33.75 into next week. Given the fact that we've had this bullish response, however, I would expect some pause, some consolidation before we attempt to move to higher levels if that's what the market wants to do. Therefore, on the short side, 33.57, 33.60 would definitely be a good short entry, looking for at least a test back into 33.15 and possibly where this all got started at 3,300, that nice round number. And if we do have some more negative news headlines, then definitely I would still be looking for 32.50 is still in play from last week's price action as well. Be safe out there today, guys. Cheers.